In today's video, I'm going to be telling you how to invest for a beginner. Before we get into the video, please like it, and it's totally free. Also subscribe to get more content on how to invest in the stock market and how to make money as a teenager and how to make money like for anybody. Also I do fishing videos. They're not that good yet because it's not very warm and my head injury too, so I can't do very much. So buy safe stocks. What I mean by this is index funds. They are not as volatile. Some index funds that I would highly recommend. I'm obviously not a financial advisor, so look them up first before you invest in them. And if you're like, oh, you like them, okay. But for a beginner, I'd rather you be an index fund because historically, over the past 20 years, the average return is 8 to 11%, and they're not as volatile. And in the beginning, you may be very emotional with your money, and I do not want you going to single stocks, which are way more volatile than index funds. Because if you don't know what an index fund is, say, for an example, the S&P 500 has the 500 highest or like best publicly traded companies, and it's very diversified. So if you buy a share that, you're already diversified, because if, say, 10 of the stocks are down in it and the other 490 are up, you're still up on the day or whatever. So I'd recommend for a beginner like 70% index funds and 30% single stocks, because like I said, you could be emotionally bad with your money, and I don't want you losing your money and not being in the stock market. Some index funds I'd recommend are VTI, VOO, IVV, USD, VTSAX, and most of them in the past year have done, or in the past 5 years, the average return is 20%, but it could be 8 to 11. That's still very good. Most people who try beating the market with single stocks are not as good as over like the 20-year period of index funds. Index funds, how do I say this? Index funds do better than 90% of hedge fund managers trying to beat the market with single stocks. And for some single stocks that I'd recommend, just do your research. Like I said, I don't want you losing money. I believe these are good. I'm not going to say them if they're not, but Microsoft, Nevada, and Apple. If you don't know what they are, research them, and if you like them, I guess, you can invest in them, I guess. Don't buy if you don't know what you're getting into. Make sure you fully understand it, because that's just stupid. Don't go into something because you hear somebody like me. I'm just a 14-year-old. I'm obviously not a financial advisor. So make sure you understand it. And then reinvest dividends, because it makes a big difference over your lifespan. If you reinvest all your dividends, it can like be a big difference, like you would see at the end of your lifetime, man. Because I'm very old. No, I'm just kidding, but it's proven. So compound interest is very powerful in the stock market. I will put a graph right here, and you'll see that in a certain year it is just shoots up because it's compound interest. And now make sure you are investing long term. I'd suggest 5 to 10 years in the stock market, and not going in saying, oh, I'm gonna invest, say, a week and hopefully my money's doubled by then. That's just stupid. It's plain out stupid. Because you're just gonna lose money if you're gonna do that most of the time. And also, time in the market is better than timing it. If you always time the market and most of the time you miss out on big days over your lifetime, that can really make a big difference on what your returns could be. And also, if you're not in index funds, which I'd suggest it as a beginner, be diversified. Don't invest in one single stock, all your money, like a couple $1,000s. That's just stupid, because what if that stock drops 30% overnight? What are you going to do? Watch it go back up, or are you going to panic sell? Most likely panic sell as a beginner. So make sure to diversify if you're not going to be in index funds. Don't panic sell either. I just said that, but like during a corrections are normal. It's healthy for the market to have a correction, and it's better because, I mean, it makes me happy when there's correction because I know that after the correction, it's going to go even higher than what it was before. And if you got this far in the video, thanks for watching. Hit the like button, like I said, and subscribe to learn more. And have a good day. Thanks. I forgot 2 things. The first thing is, if you want to open a Robinhood account, use my link down below. You can get a stock valued up to $225. And if you have questions, go follow my Instagram and DM me, because YouTube disables comments for people under the age of 18. And have a good day. Peace.